Welcome back to Beyond Transparency, AI's impact on the fixed income market. This is episode 8, The Road Ahead, the Future of AI in Fixed Income Markets. At Solve, our mission has always been to bring clarity to fixed income pricing, connecting millions of fragmented data points into a more transparent, intelligent system. We've seen what AI can do today, but what happens next? We believe the future of fixed income belongs to those who embrace data, adopt intelligent systems, and build for adaptability. Predictive pricing is just the beginning.
There's a lot more electronification in the space. There's a lot more firms that are becoming a lot more sophisticated when it comes to data and tools and analytics. And as a result, firms are looking for better solutions, for data, for tools that help them stay competitive in this space.
AI is accelerating that shift, making bond markets more connected, more reactive, and more measurable in real time.
When you look at Solve Price, Solve's solution to our front office pricing needs for our clients, it's a very interesting price. It's a unique price. It's something different than the algo-based prices that most people have used in the past. It's completely AI-driven. It removes all bias, and we've designed the model to reduce the error between the actual prediction price that we give you and the trade level that happens next.
That's the direction we're headed. A world where predictive signals are integrated across systems, from quoting and valuation to compliance and portfolio construction.
Ultimately, relative to munis, corporates are much more liquid. So that should help us significantly with respect to accuracy and being able to just get a vantage point of the market. Additionally, one of the biggest assets to us in pushing this model forward and staying ahead is our proprietary quote products. So we have good visibility into tens of millions of market quotes each day as it relates to corporate securities. That should help us significantly both in areas wherein things are more thinly traded and in the more liquid regime.
As interoperability improves, AI can help unify a historically disjointed ecosystem, allowing firms to act faster, with more confidence, across every market condition.
There are the folks in the room who are going to want to dig in and really understand the model and what we're doing, the predictive model and the AI and how we're utilizing it, because there's the black box component. So how do we get them comfortable with that? And we're very comfortable sharing that information. And then there are the folks who are looking at the numbers. At the end of the day, they're just looking at the predictive price. Is it good or is it not good? And that's what they're asking. So when they're testing us, when they're trialing our platform, when they're looking at it against 3 months of trade data, they want to know how good we are for the bonds that they care about. And we are able to, for their back testing purposes, to deliver to them the information that they need based on the trades that were conducted, the size of the trades that were conducted. We're able to deliver that information. But more importantly, prospectively, when they become a client and are using our platform, they're able to see the power of the predictive nature because they're getting a comfort level of what we've done through back testing. But then number two is with the introduction of a confidence indicator. And that's also going to give them greater comfort as they're using the predictive price.
The more clients engage with predictive pricing, the more they see its value, not just in numbers, but in the clarity it brings to complex decisions.
Firms are being highly analytical when they're looking at a predictive price to adopt because it's going to become part of their DNA as they go forward.
Putting these types of analytics in the hands of our clients is, certainly an exciting prospect for us. Will it ultimately lead to electronification and more automated trading practices in the fixed income marketplace? Probably over time.
As we've engaged in conversations with clients, it has become apparent that some firms have made great strides over the last few years in terms of onboarding talent, data, and tools, which allow them to leverage AI to achieve better execution and realize various efficiencies. Right. At the same time, there are quite a few firms that feel like they're falling behind, and they're looking for solutions in the market that could help them bridge that gap. Interestingly, the demand actually comes from both of those cohorts. The firms that feel like they're falling behind, that's certainly the obvious one. They're looking for help so that they could bridge the gap with some of their competitors. But what we've also found is that firms that are further ahead in terms of their adoption of AI, they're still looking for solutions that help them create guardrails for their internal models, to make sure that they're capable of identifying opportunities when models agree or disagree. So we're seeing a tremendous demand for AI-based solutions.
And that momentum is growing. As markets continue to evolve, Solve Price will expand right alongside, enabling predictive trade prices for high-yield and investment-grade corporate bonds, just as we did for municipal bonds. This marks the final episode of the Beyond Transparency series. On behalf of all of us at Solve, thank you for joining us. If you'd like to learn more about how Solve Price is reshaping fixed income pricing, we invite you to reach out. Let's build the future together.